Okay, good day everyone. Hope you are fine and well. So today I don't want to just do much, but I don't know for the past videos I've posted. I don't know if it have actually been of benefit. If it has, then I have another gem for you guys today. All right, so today we are going to be talking about SMT. All right, SMT and the 159 trading model. All right, this is what we are going to be talking about today. SMT 159 model. Now, what is SMT? All right, SMT is just like is when you can actually use SMT is when you're actually doing pairing of pairs. That's when you can use SMT. And then this 159 model is a simple trading model that a beginner can actually learn and then utilize it. All right. Now, this 159 model, all right, like as a beginner, you have to, let me just say, how am I gonna put it? Like you have to actually be scaling from one time frame to another. All right, like from the 4 hours to the 15 minutes, and then when you master that 4 hours and 15 minutes very very well, you can now jump over to the 5 minutes 1 minute. Why jumping over to the 5 minutes 1 minute is so that you can have a big win rate and a smaller stop loss. All right, so that is how it is. So that is why I said you actually need to scale from one time frame to another. All right, but you don't need to actually rush it. All right, so it is just something like a step by step. So I'm actually going to guide you guys, all right, with some a little bit of some short example, but we are actually going to talk about a whole lot of things today. Now, for you to actually, even no matter this SMT, no matter the 159 model, all right, how can you actually start? All right, so let's just say starting of the week, all right, as a beginner trader or even as an intermediate trader or wherever, all right, just the first thing you need to be doing is from that Monday, all right, which actually we know that the market open on a Sunday evening, but we are just saying for example from Monday to Friday, all right, which is actually 5 working days in the trading market, which we all know. But as a trader, important thing you need to actually start your week with is looking at the weekly time frame. So your higher time frame buyers, all right, your higher time frame buyers, like what I mean by bias is if are we bullish or are we bearish. All right. So your higher time frame bias should actually tell you if you are bullish. All right. Sorry, bullish or bearish. All right. And this is actually linked up with the weekly time frame. All right. The weekly time frame. All right. I don't know. Like this. So our higher time frame bias is our higher time frame bias. You need to be looking at it. Are we bullish or are we bearish? Now, if we are bullish, then we need to come and know that okay, throughout that we should be looking for buys. All right. If we see a confirmation that okay, we should be looking for buys, good and fine. If we should be looking for sales, good and fine. So the number one thing is every trader should understand is number one, patience. After patience, then it's actually asking themselves questions. Most traders don't ask themselves questions. That's why some of them actually make losses the whole time. All right. Some of them are just like, okay, since it is bullish, let's just click on the buy. All right. Then without knowing that what if price is trying to respect something, what if price is actually trying to disrespect something before you can actually do something like that. All right. As simple as that. So that is the number one thing you need to be looking at. All right. So number one thing is understanding your higher time frame bias. All right. And that is weekly. Now you have to jump over to the 4 hours time frame using time frame alignment. Yes, the daily time frame is actually important, but this time around we are looking at the 159 model. And this 159 model, first thing first, you need to actually change your time to the New York Standard Time. All right, like you can see mine is actually in the New York Standard Time. All right, so you need to change your time to the New York Standard Time, and I think in the settings, I think you can actually change it to 24 hours, something like that. I don't know where that stuff is. Yes, all right. you can change it to 24 hours or 12 hours. All right, because of we have 159 a.m. section, 159 p.m. section. All right, so you can change it. All right, to the 24 hours. Actually, is kind of, for some persons it might actually be different. All right, or you can just stick with the 12 hours. All right, so let me just use the 12 hours so that it will be very understandable for some persons. All right, so now number one is New York Standard Time, and number two is, okay, what is our bias? Our bias, we are bullish for the day, or are we bearish for the day? All right, there are different kind of forms about this trading 159, trading 159. But before you want to come and trade the 159, you need to be asking yourself questions. Now I've actually seen my bias. The next question then you need to ask yourself is, have we respected a key level, or are we disrespecting a key level? I don't know if you understand what I mean. All right. Next question is key levels. All right. Key levels. Now, are we respecting? All right. Are we respecting the key level, or disrespecting disrespecting the key levels? All right. And this key level consists of fair value gaps. All right. Other blocks and the rest. All right, but there are things upon things I'm actually going to tell you guys about all this kind of key level. I think I posted it on my this thing um WhatsApp, yeah, my WhatsApp communities, about some of these key levels and what they actually mean on lower time frames and all that kind of stuff. But for now, what we are going to do is just focus on the fair value gaps, other blocks. All right, that is the major key levels we have. These are the major key levels we have. Then maybe you can go to some lower time frame, and then you can be seeing breakout blocks and all those kind of stuff. Yes, it can happen on the 4 hours. Yes, breakout block can happen on the 4 hours. It do happen, but some of these PD rays actually forms other kind of PD rays on lower time frames. All right, so I'm actually going to keep that for my students. I'm not actually going to say it out. All right, that one is actually for my students, but this one is just stick with the fair value gaps and the other block. All right, so now we have actually look at the fair value gap and other block. You need to be asking yourself, are we respecting or disrespecting? All right, now when you find out that, okay, we are respecting, now you we are respecting the buy. Are we respecting the buy and bullish, or are we respecting the bearish, which is the sell? Now, if the bias is bullish, now we want to see price respect. All right, respect that price that bias by actually giving us a buy signals that, okay, we should be actually going. All right, we should be bullish or we should be bearish. All right, depending on your bias. All right, now now that is done. All right, now we have seen our key levels. Now what we want to do is mark that our key levels on a 4 hour time frame. All right, that is if you want to have a good successful win rate actually. Now what you want to do is you want to mark that your key levels on the 4 hours time frame. All right, mark your key levels on the 4 hour time frame, and then jump down to the, let's just say, M15. All right, M15 time frame. All right, now there are times whereby you don't see key levels on the 4 hours. All right, the 1 hour can actually be of help. All right, just use the 4 hours, 1 hour to find key levels. 4 hours and 1 hour to find key levels. Actually, I'm not supposed to be saying this, but 4 hours and 1 hour. All right, because of there are times whereby you might not actually see the whole blueprint on the 4 hour time frame. The 1 hour can actually come and tell you where price is actually coming into, and then you have to set it no matter the kind of time frame. As far as 1 hour, 4 hours, within these time frames, all right, mark the key levels. You don't need to actually trade on that time. All right, what you need to do is mark the key levels and then go to the um lower time frame. All right, and pick a trade. Now, I I want to go into these details like very very deeply because of each we need to understand that we all know that each 4 hour candle, right? Each 4 hour each 4 hour candle, all right, on a 1 hour, right? sorry, time frame is four candles, forms four candles. All right, each, like we can see this one five, like this one. All right, it will form around that 1 a.m., 2, 3, 4. All right, it closes at that 4. All right, 4 a.m. Then a new candle actually open around that 5, 6, 7, 8, and then another one opens around that kind of 9, 10, 11, 12. And then you now come and start see the PM session will now continue with the flow again, which is just like that. Now, the only thing there you need to understand, and that is so beautiful about all this, is that number one, price. All right, how am I going to put it? I would like say, like, the time is actually in circles. All right, but different meaning, if I'm actually going to put it that way. All right, it's actually in circles but different meaning. All right, what I mean is 159 repeats. All right, it always repeats. It always repeats. There's no time which is going to come and be like 1, 6, 9, M10, something like that. It might not actually, but this basic model 159, it actually just stick there. So each hour time frame, each 4 hour candles on a 1 hour time frame, all right, is formed. Oh, sorry, word forms four candles, all right, on that 1 hour time frame. Now, if you actually watch the video of what I posted about open high low close, I didn't go into details. All right, I didn't go into details about this 159. I mean about this open high low close. Now let's just say this is actually um okay. Let's just take this. All right, let's just say let me do this. Okay, and no, yes, thank you. So number one is, let's just say okay, now we are on the 4 hour time frame, all right, and then this was a key level. Let's just take this as key level, make it straight. All right, key level. Now this is actually a key level. All right, let's just say it's still on that 4 hour time frame. All right, let's just say the 1 a.m. candle actually give us, we are bullish, actually we are bullish, but price actually sold off first. All right, when price sold off first, because of this is actually, like I'll say, this formation is for mainly beginners. Like beginners can utilize on this. All right, beginners can actually utilize on this very very well. All right, just utilize on this, and I think it can actually give you a good win rate. Don't try to rush the market. Number one thing you need to, like I said, patient. Don't trade what you want the market to do. All right, trade what you see. That is number one. And there are times whereby if that your market or that your entry model you are looking for doesn't form that much, all right, then what you have to do is just make sure that you just close your laptop and come back the next day. As simple as that. All right. Don't be too toxic. Don't be like every day I want to trade. It is better to stay away from the market than actually making loss in the market. Believe me when I tell you that. So that is number one. Let's just say okay, now this is actually the basics stuff. All right. This is one. All right. And this is five. All right. Five actually came into the, let me just say price. Let's just say for example, okay, this was price. All right, it continued the sell. All right, from this point, from this area, continued the sell, and then when it came into this key level, all right, sellers came into this key level, and then started going back up. All right, and then when it went back up, it closed, and then it have to leave a long week. All right, something like a week around here. It has to leave a week. Okay, around this area. Now, for most persons, this thing actually, this five is mainly a trap. All right. One thing most person need to understand, and which most persons and most guys won't tell you, is number five. Time number five. All right, mainly content trap. Like it's like a trap, which most persons, if you are not careful of, all right, you become illiquidity right here. All right. Now, but if you know the basic stuff, then you will not actually become liquidity. I bet you on that. Now, another thing is this. All right, these five need to close. Sometimes it's supposed to close with what you are expecting. There are times whereby if you close with a sell candle, let me just say the sell candle was um color was let me just say black. Let's just say for example, mm, black for example, very black. Let's just put it that way. All right, it was black, and this is also a sell candle. All right, also still black, and just make it 30. Just keep it out that way. All right, it's still black. There's a high possibility whereby 9, all right, will actually continue. Maybe there's another thing that's actually drawing price downward. All right, 9 might actually continue to sell off, but I bet you sometimes you'll be expecting price to actually move up higher. I don't know. I don't need to be going into this, but I need to take it step by step. But I'm just trying to come and tell you this before it skip my mind. There are times whereby you want price to move up higher. Price, yes, might move up higher. You've entered the buy, you're on profit, you are smiling, all right, and then later on, at maybe 9:30 or 10, you now come and start seeing price will now come and dump. Now leaving you with something like a week right here, all right, and then you have to come and do some back testing again. You come and be like, and maybe price actually had to come and sell. Some persons don't even know why price just sold off, something like that. All right. So, but the most important thing is just that this number 5, you need to close with the kind of candle, the color of the candle you are expecting. If it's bullish, let it shine that green color. If you're actually using, like mine is different, all right. Mine is white, cell is down, all right. So now, what you have to come and start doing is, if the color now, all right, is like, okay, let's just say back to ash, and 20, sorry, just keep it at this point. Okay, good and fine. All right. Now you can now know that 9 is actually going to be bullish, something like that. Right. Just take this. This will become buy side. All right. Buy side. This will become the turtle soup. This has to be the turtle soup around here. Coming. And then yeah, that's it. Just with a week right here, just for example. All right. This is a basic 159 model. This you are seeing right here, all right, this you are seeing is a beginner friendly um 159 model. This now you are seeing like this now is a beginner friendly 159 model, so a beginner can actually utilize on this. All right, so what you have to do is this.